Good morning. It's Thursday, the 17th of April, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming from a warm Mumbai, India's financial capital. The top stories and themes for the day. The Sensex has rallied over 3,000 points in 3 sessions, and where could it go next? Gold hits another fresh high. Angel tax returns in a new avatar as income tax serves notices on companies with foreign investments from Singapore. Parents are putting oral rehydrating salt packs in their children's backpacks, and India's pharma industry is benefiting. Why Indian textile manufacturers want cheap imports of viscose staple fibre from China.
This is a core report with Govindraj Ethiraj.
The markets are strong. Indian markets continue to demonstrate underlying strength, which has been missing for some weeks, bouncing back despite some selling pressure that came in mid-session on Wednesday. Overall, the main indices rose for the third straight day, thanks mostly to interest in financial shares, including private banks, apart from energy stocks. Tariff flip-flops, of course, continued, with the White House saying China would be hit with a 245% peak duty now, which is effectively a non-figure since it brings trade to a halt. China has responded by saying now that they would agree to trade talks if they are treated with respect, including reining in disparaging remarks by members of the Trump cabinet, according to a Bloomberg report. Other conditions from China include a more consistent U.S. position and a willingness to address China's concerns around American sanctions and Taiwan, said that Bloomberg report. Some of those flip-flops did affect markets, but broadly Indian markets were unaffected. The Sensex closed up 309 points at 77,044. The Sensex has now rallied 3,197 points in the last 3 trading sessions, and the Nifty closed at 23,433, up 104 points, and has now risen about 1,038 points in the last 3 days. We did mention that India was relatively unaffected. Asian markets, for example, like Hang Seng and Taiwan were down 2% each. Kospi and Nikkei were also down 1%. China's Shanghai Composite Index was a little higher as China reported strong GDP numbers. The broader indices were steady, with the BSE Midcap going up 0.6% and the Small Cap Index going up 0.9%. Foreign institutional investors snapped a 9-day selling streak on April 15th to buy domestic equities worth just about 6,000 crore rupees, or about $800 million. Now, this was the third largest single day buying this year. And on the same day, domestic funds, that's April 15th, sold stocks worth about 2,000 crore rupees, according to National Stock Exchange data quoted by Business Standard. Now, it's a little early to call a trend on FII buying, since most of their actions have involved selling in recent weeks, with, of course, some buying as well. Okay, now on to Wall Street. S&P futures were down on Wednesday as investors looked at a stock warning from Nvidia that pressured global tech. Futures tied to S&P 500 and Nasdaq 100 were all down, and the Dow Jones Industrial Average was down 31 points, according to CNBC. Shares of Nvidia dropped more than 6% after it said that it will post a $5.5 billion quarterly charge relating to exporting its H20 graphics processing units to China and other nations. The company said in a filing that the US government now required a license to send chips from the United States to China. Other chip makers were down too. Big tech stocks like Meta Platforms, Google parent Alphabet, and Tesla were also down. Meanwhile, gold scaled a record peak on Wednesday as a weaker dollar, escalating trade tensions, and concerns over global economic growth continued to push funds into safe haven investment, being gold. Spot gold was at $3,287 an ounce after hitting an all-time high of $3,294 an ounce earlier in the session. Earnings season continues. Bangalore-headquartered IT services major Wipro posted a net profit of 3,570 crore rupees for the fourth quarter of 24-25. That's up about 26% from a year ago. Profit was up about 6.5% quarter on quarter. Revenue was up 1.3% to about 22,500 crores, and sequentially too, the revenue grew about 0.8%. Bloomberg estimates say that the company's fourth quarter performance missed estimates, and revenue was expected at about 22,683 crore, net profit at 3,350 crore. Srini Palia, CEO of Wipro, said that the company closed 24-25 with two mega deal wins, an increase in large deal bookings, and growth in their top accounts. According to them, client satisfaction scores improved, reflecting strong execution and engagement. We will, of course, do a deeper dive into IT results and what they're telling us, including in terms of attrition, and that we will do next week. Moody's mixed bag of warnings. Moody's rating said that India's economy is likely to weather the latest wave of US tariff hikes with only limited fallout, though it expects India's GDP growth to now slow slightly to the range of 5.5 to 6.5% in 2025, down from its earlier estimate of 6.6%. It also warned that broader global trade tensions could weigh on economic growth and credit conditions worldwide. The downgrade is attributed to weaker global demand and declining merchandise exports. India's exports to the United States account for about 6.6% of nominal GDP, placing it amongst economies with a moderate exposure to the United States' protectionist push, the Moody's report said. India's trade surplus with the US jumped about 16% in the last financial year, rising to about $41 billion from about $35 billion in the previous year, according to Commerce Ministry data quoted by Reuters. Moody's said India is relatively better positioned than major Asian manufacturing hubs like China, Taiwan, and South Korea. China's growth, for instance, could slip to 4% or lower. The agency also added that broader credit environments may turn fragile as higher trade barriers slow global commerce and investment. Is the angel tax back? The Income Tax Department has issued show cause notices under Section 68 of the Income Tax Act to new companies or startups over funds routed through Singapore, seeking explanations for investments received over the past 5 years, according to a report in the Business Standard. The department is questioning the source identity and creditworthiness of overseas investors in these transactions. In addition, the notices are being served on non-resident Indians holding bank accounts in Singapore. The Business Standard report quoted a person saying that these are not routine inquiries but formal show cause notices, and companies are being asked to justify the inflow of capital even from past years by furnishing detailed investor documentation. Section 68 of the Income Tax Act 1961 allows the department to question unexplained credits in taxpayers' books. I reached out to Ajay, Rotti, founder and CEO of tax advisory firm Compaas, and I began by asking him if it was true that such notices were being served and what was the implication of this move or moves. I also asked him if this was angel tax in a new avatar.
It is happening. There are notices being issued under, what's called Section 68, and we'll get to what that notice actually means and what Section 68 is. It is happening. They're asking these questions about different investments, more particularly Singapore, that I guess, and this is more educated guess, is because of some exchange of information that could have happened. Department today has a lot of these exchange of information agreements. Therefore, even though the income tax department may not have a laundry list of all people who've invested from Singapore, the Singapore government will be giving list of all residents in Singapore who wired money to India, etc. So they may be going with that list, but yes, it is happening.
Section 68 seems to be a fairly broad brush kind of section, and it covers money that comes into your account. So walk us through how it's being applied here.
Right. So Section 68 is one of those anti-abuse provisions which really brings to tax something which can't be explained, and in particular, unexplained cash credits, which is any amount that you receive, which is accounted in your books. So when you receive money, it can either be revenue, what's called revenue receipt, which is a taxable receipt, which is income. And to put it in very layman terms, it's something that goes and sits as income in your profit and loss account. Or it could be a capital receipt, which is really receipt in a business, like you borrow from a bank. You get money, but that's not income. You take a loan from somebody, that's not income, but you still received money. So that sits in your balance sheet. What 68 does is, if any receipt that you've got, you're not able to explain to the satisfaction of the officer, it is deemed to be income. So you may have borrowed money, but if you can't explain who you borrowed from, what's the bank, the papers, a loan agreement and things like that, very technically, it can become income. So it is broad brush, like you said. It is any credit that's not explained. Today, the department is using that for share subscription, which is some investor, you say, where did you get this money from? And the company says, so-and-so invested from Singapore. Therefore, that person invested $100,000 and I issued shares and he or she is a shareholder today. Now, if the officer is not satisfied with the credentials of the investors, you're not able to show who the investor is, his or her proof, etc., they'll say that, this is unexplained credit. Therefore, it is your income. Why does this exist in the system? Because in the past, when you had to bring in money which is unaccounted, you could just bring it in and say, so and so gave it to me, and therefore it's not taxable and it's a loan I have received from somebody. The department, in its wisdom, thought that there has to be a basis in which if you can't explain a credit, it has to become taxable. And that's the genesis of this section long back. Today, they are using this for shares issued to foreign investors as well.
Isn't this angel tax in another way?
Very interesting question. It is, because in a sense, angel tax also sought to do the same thing, which is if there is a price. But the fundamental difference, Govind, is angel tax hinged on valuation, which is to say, if you issued at a higher than the fair value, then it would become taxable, not everything. Here, if you can't explain who the investor is, everything from the first rupee becomes taxable, irrespective of what your fair value of the shares is. The challenge that is coming today with some of the people I'm handling some of these notices is, these monies could have come in a few years back. And when somebody invests, you don't ask that person, give me your return of income that you've filed for the last 3 years, etc. As long as you know the person's, and these are famous investors, funds, angels who are known to you, etc. Today, the income tax department is saying, you received this money from so and so. Please give me his or her 3 years return of income, bank statement, source of income of that person. Now, that is not something a company will collect from its investors. So, in a lot of the cases, we are actually telling them, so and so is the person, this is the permanent account number, this is where he's assessed to tax. Why don't you seek information, because you will have access to that person's taxable records, etc. In some cases, to be fair, the department has dropped these after they know that it's a genuine investor. We provided some information, etc. But in some of the cases, they're asking for source of the investment from that investor's bank account and from that investor's return, which is becoming quite onerous.
And that obviously is in Singapore. But effectively, even if the company in India has issued shares, and I'm talking about investment now, or not the other categories like loans and so on, even if the company has issued shares, that means which would reflect in its filings to registrar of companies and so on, the income tax could still say that this credit is something that I'm going to treat as income.
Correct. Yes, they can, because they will then, what they will say is that the investor who's paid this money has not been, you have not established genuinity there. You have not established that this person exists. You have not established what the source of that person's income is. See, this was misused in the past. Your own money was sent out, brought in using, companies which didn't exist and things like that. So there has been some misuse. I wouldn't sort of really blame the income tax department for going hard on this, but somewhere they also need to draw a line to leave out the genuine cases. This is a classic case of throwing the baby with the bathwater.
Right. So why is it Singapore specifically? I mean, obviously there's some, as you also suggested, that there's some exchange of information that's happened at a government to government level. But if it's happened to Singapore, then I'm guessing it could move to other countries and other investors domiciled elsewhere as well.
It could. And like I said, that's more a pattern that I could find, or an educated guess, not really based on any formal information that we have. But once they are asking for this information, then they are asking for all investors. And I have personally seen orders where 68 cash credit entry has been passed even for resident investors if you have not been able to explain who it is from and provide the information to the satisfaction of the officer. There is some bit of commonality in the notices concerning Singapore investors, but it is happening across actually.
How do you see this playing going forward, Ajay?
So I think, in some cases where the officer is clearly not, he or she is not satisfied with what has been filed, these adjustments are happening. And maybe there'll be some relief at the appeal levels. I would think the better way here would be for the CBDT to actually come out with some guidelines to say that, what are the basic things that you need to see and accept some of the explanations that is being offered. Because it is quite difficult for the company to have collected all information about those investors. So if at least a basic due diligence is done, something similar to a KYC is done, and that much information is given by the company, then if the department still believes that there's a problem, they can always go after the investor where we've given the details. That could be a more practical way of handling this than really holding the company which has raised money to be responsible for collecting all information.
Because in angel tax, something similar happened because investors, including in India, had to show their source of income and PAN details and so on. which effectively an investee company finds it difficult to ask for. And in this case, this is cross-border, as you pointed out. I mean, how do I ask a company or an individual in Singapore that, to send 3 years or 5 years of your tax records and so on?
Correct. And I've actually had live cases where the company has put its effort and the investors actually come back to say that this is confidential, and rightly so. Why would the investor today open up his or her return of income for $100,000 or $50,000 that he or she has invested as an angel in the company?
You mentioned that the CBDT could look at some kind of guidelines or some kind of direction or guidance on how to approach these, so that I'm wondering if there's something else, because, at one level, we continue to debate about startups. And while I'm not saying that all startups are clean, and we're seeing examples of, skullduggery in accounts and things like that quite recently. But what is it that we can do at a slightly larger level, or maybe let's say at the point that those investments are being made, so as to ensure that this does not crop up again and again?
So some bit of, little bit of hygiene at the investee companies which are raising funds is to at least have some basic information of tax registrations, identity documents, etc. of the investors if they are individuals, and if there are companies, at least some charter, certificate of incorporation, which country they are incorporated, what is there, and things like that. That's at least the basic stuff that can be given to the department when they're asked. And when this basic threshold is at least met, I think overall, even at litigation future levels, you have a case to argue. If you don't have anything about the investors, then probably the department can build a better case and does have a case to look at these cases where money is being funneled in through sources which should not be. So I think there's a little bit of learning, but there's also some bit of practical approach and some bit of, a more lenient, I wouldn't say lenient, more practical view that the department has to take here as well.
Right. Ajay, thank you so much for joining me.
Thank you, Govind.
India is seeing an increase in gastrointestinal conditions. The country is seeing unprecedented and early heat waves. Northern parts of India, for instance, have already been experiencing extreme heat this week as temperatures have crossed 40 degrees Celsius, including in New Delhi. Barmer in Rajasthan has touched 46.4 degrees Celsius, more than 6 degrees Celsius above the maximum in April, or the average maximum in April. Increasingly, parents are placing oral rehydration solution packs in their children's school bags in some places. Oral electrolytes as a category saw a 27% increase attributed to those unusually high temperatures in March across the country, according to a report from pharma industry tracking firm Pharmarack. The Indian Meteorological Bureau said last week that most parts of the country would experience an intense heat wave this summer. On the other hand, and linked to this, India is seeing a rapid growth in gastrointestinal conditions and sales of medicines for it. Even, for example, probiotic microbes saw a 13.5% increase as antibiotic usage also remained high thanks to post-seasonal infections. I reached out to Sheetal Sapale, our regular guest and vice president at Pharmarack, and I asked her to take us through what was happening in the gastrointestinal space and why sales were rising so sharply.
Okay, the gastro segment has been growing quite well for the past few months. And this month, especially, the growth for the month of this segment is close to 11%. Among the top categories, the growth is the highest seen over here. And within the gastro segment, the segment is quite broken down into several sub-segments, which may be antacid products, laxatives, antidiarrheal products, probiotics, oral rehydration solutions. We are seeing a good growth across all the segments. So typically, if you look at the seasonal pattern that we are following, March typically is a season where the onset of summer starts in majority of the states within the country. Oral rehydration solutions are the ones which pick up very well. In fact, if you look at the most popular oral rehydration solution, Electral, it has grown by almost 30% in terms of units for the month. And this growth has been consistent as well for last few months. Also, if you look at the number of viral infections that have happened within the country, because the climatic conditions are such that morning, evening, there is a wide variation in temperatures. The temperatures are quite extreme across the different states, as a result of which viral infections have picked up. And because of viral infections picking up, there are certain other categories of drugs which also pick up in this period. Typically, if you take drugs for pain, then antacids also have to be given along with pain category. Also, antidiarrheal infections have seen a surge. of late across many states. And when it comes to antidiarrheal preparations, along with antidiarrheal drugs, probiotics, something which is proactively taken to restore the bacteria in your gut, has also seen an increase. So net, if you look at the seasonal trend or the seasonal diseases which have picked up, they have picked up really well, and probably because of the extreme temperatures, slightly more.
Let me pick on two specific categories. One is oral rehydration solutions, that's ORS, and the second is probiotics. Now, ORS as a category has existed, but it was usually taken only when people were not well or already down with fever and so on. But now it's also a method to combat the extreme heat. So are manufacturers increasing production and supply, because there are quite a few brands, as I can see, in the market? In response to that, is it something that has demand created supply, or is supply creating demand?
It's the demand creating supply. The demand for these products have genuinely increased. In fact, some months ago, when we had done studies in certain states, we have seen that in certain states where the education levels are also higher, parents usually pack a ORS Tetra pack in their children's pack. Okay, so it's a proactive measure of taking care of dehydration, which may occur in due to extreme heat. Now, if it happens in certain schools as a proactive approach, then naturally the consumption is going to increase. That's the reason why, the extreme heat has made people little more proactive. People know that, and there are certain states where temperatures even cross 40 degrees, wherein it's better to be safe than sorry.
Right. So you're saying awareness amongst parents could be driving it, and children are potentially the larger consumers of this. So let me pick up another segment, probiotic. Again, something that was not really on, let's say, the top of agenda, and when it came to buying, let's say, either treatment, preventive or curative. So how is this category caught on so much?
Probiotics, first is even the marketing done by the companies having probiotics has improved significantly, and for good. Because earlier, when it used to come to antidiarrheals, it was just, having little curds or something along with your antidiarrheal preparations. But now these probiotics, which are relatively having a higher percentage of the gut bacteria, they help in recovery faster. In today's scenario, wherein office goers really don't have that much time to, recover, this is a faster and easier solution. Plus, you see a good amount of intake by this type of preparations, even by a lot of health conscious people.
Right. So if you were to now combine these two or three sub growth areas, the overall GI segment growing, does that reflect people becoming more aware of, let's say, stomach conditions or gastrointestinal conditions? Or is it that the illnesses are increasing, and quite dramatically, if so?
Yeah, the illnesses are increasing because I wouldn't call it more of awareness, but then it is the extreme conditions which are leading to people to take treatment. Unlike the lifestyle diseases, this is something which is specific. I wouldn't take a probiotic for lifetime. I would take a probiotic only when the condition hits me, unlike a cardiac diabetes product which I need to take for lifetime. So this is the disease conditions themselves have seen a spot which has led to increase in consumption.
And you talked about seasonality, and again, looking at the composite now. So when we say that between March of last year and March of this year, your growth is more than 10%. But last March also was beginning of summer or an early summer. So how is it that we are seeing so much growth in the same time period?
See, the growth that even you're seeing over here is a good amount of value growth. Okay, prices also have increased. At the same time, for the Castro segment, there is a unit growth seen as well. The unit growth may not be 11%, it is quite limited. But then increase in prices have also driven the growth of the segment to a good extent. In fact, in majority of the segment, the price growth is to the extent of 5 to 7%. So if I were to look at the price growth for the gastro segment, for the month, out of that 11% growth that I am seeing, close to 7% or 6.8% comes from the price growth. New product growth is around 2.4% and volumes is around 2.2%. So prices have also driven the growth of this segment to a good extent.
And what are the top brands in this category, Sheetal?
Top brands which are really amongst the top 100 brands in the Indian pharma market, we will have brands like Pan, then we have Live 52, we have Pan D, Electral, which is one of the biggest brand, Pantop, a very strong brand in this market, Rantac, Ranitidine. So these are some of the strong brands, and these are brands which are worth more than 300 crores, 300 to 400 crore brands.
Each. And pan is all pantoprazole, right? I mean, they're all the same
Yeah,
thing.
and yes. So if you look at Pan, Pandi, Pantop, all are pantoprazole brands. So basically things in the antacid segment.
And these are essentially for acidity.
Yeah, they are for acidity. And now acidity also, if you see, viral fevers leads to a lot of pain category consumptions. And when you take drugs for pain, you need to take antacids. Also, there are very common symptoms of GERD, gastroesophageal reflux, wherein there is a lot of acidity and a lot of chest pain. Over there also, these drugs gets consumed to a good extent.
Right. Sheetal, thank you so much for joining me.
Yeah, thank you so much.
India's textile industry conundrum. With the US markets closing or closed to Chinese exports, India's downstream industries are now fearing that they will be forced to fight cheap imports. Several industries have already sounded alarm bells. To give you a context, India recorded a trade deficit of close to $99 billion with China in the last financial year that ended last month, according to trade data, thanks to a big surge in imports of electronic goods and consumer durables. In March alone, according to a report from Reuters, goods imports from China jumped about 25% to about $9.7 billion, led by electronics, electric batteries, and solar cells. Total imports from China rose to about $113 billion in 12 months through March, according to that report via Reuters. Meanwhile, India's exports fell 14.5% to just $1.5 billion in March, with total exports, that's for the year, dropping to about $14 billion. So imports, about $113 billion from China, and exports from India to China, $14 billion. Ajay Srivastava, founder of the Global Trade Initiative, a Delhi-based trade policy think tank and frequent guest on our show, told Reuters that this is a wake-up call for India as the rising imports reflect deeper structural dependencies of the Indian economy. One industry is textiles, which says prices of viscose staple yarn, which are now being quoted lower than Indian prices. The other problem is that they would like cheaper viscose staple fibre, which goes into the making of viscose staple yarn, but imports are restricted because of quality control orders and effective non-tariff barrier. And there is only one company that makes viscose staple fibre in India, that's Grasim of the Aditya Birla Group. The roughly 28-year-old Tamil Nadu Spinning Mills Association, or TASMA, which has close to 850 members, has warned about potential mill closures and job losses because of the unfair price structure created by cheaper Chinese viscose staple yarn. TASMA says China is dumping viscose staple yarn at a price of 185 rupees per kilo versus the domestic price of 198 rupees per kilo. I reached out to K. Venkatachalam, chief advisor of TASMA based in Dindigul in Tamil Nadu, and I began by asking him to provide us a sense of his membership and the kind of companies and the different areas of textile manufacture they were involved in and the challenges they were facing.
Mainly around 60% of our members are processing cotton into cotton yarn, and some 5 to 10% are processing cotton fabrics also, and another 5 to 10% are engaged in the processing activities like bleaching, dyeing, textiles, made up everything. So the balance of around 30%, around 15 to 20% are in the field of viscose staple fiber and viscose staple yarn. And a few of them are also engaged in the polyester fiber, polyester yarn also. This is how distribution of numbers are seen from the network what we have now. The major portion is in cotton, and still a major portion, yes, the second major portion is on the viscose processing. Some of them are also in the polyester yarn manufacturing.
So all the members are essentially using either cotton or viscose staple fiber as an input. They are not either trading in cotton or producing viscose staple fiber themselves.
We are buying cotton, we are buying viscose fiber, we are buying polyester fiber. So based on the fibers so bought, we are making the yarn. We are either finishing it by the yarn itself, or some of them are again value adding to the developed fabrics, made-ups, garments, etc. That is the process are also going.
Given the fact that there is a tariff war going on and clearly China may divert or perhaps has already started, Chinese producers have already started diverting more of, in this case, man-made fibers to markets like India. One of the points that you've been making publicly is that they are dumping viscose staple fiber at a very low price, which is about 185 rupees per kilogram.
My concern is not with reference to the dumping of man-made fiber. My concern is with reference to man-made yarn, that is viscose staple yarn. It is not viscose staple fiber. There is a difference. Fiber is a raw material like cotton. Like cotton yarn, the viscose staple yarn is the finished product that goes out of a spinning mill. So I am concerned about the yarn that is unscrupulously allowed for imports from China and all being dumped there in India, affecting the entire operations of the Indian spinning mills, which are already engaged in the manufacture of viscose staple yarn. So it is not a question of fiber they are dumping. In fact, to go little ahead of it, because of the quality control order imposed by the Ministry of Commerce, coupled with the Ministry of Textiles notification, countries which are capable of producing the viscose staple fibers are not in a position to supply the fiber to India. Some quantity restrictions or otherwise quality restrictions are made unnecessarily. So they are not allowed to get the certification under the QCA, it is quality control order. Because of that, we are dependent only on a single monopoly viscose fiber manufacturer in India. And other than the single manufacturers, we are unable to get imported the fiber from other available countries like Indonesia, China, and all these countries.
So what you're saying is that you would like cheaper viscose staple fiber in India, but you're not able to access it because there's a single company in India, and because of quality control orders, you're not able to.
It's not an issue at all. But we want to get the QCA, this quality control order imposed on the companies which has the capacity to export their fiber to India should not be restricted. That is where our main issue is.
What's the price difference between, or the value addition between staple fiber and staple yarn today?
It will be close to around some 88 by rupees.
Your current concern is that China is selling or exporting viscose staple yarn, which many of your members are producing, at a much lower price than what is being sold in India.
Price is at present, it is available in the market to the weavers at 185 rupees per kg of yarn. Whereas our cost on production by using the fiber supplied by the Indian manufacturer comes to close 198. Earlier it was there here and there, but this was no much of the problem is faced. Only very recently, last 1 week, people have started quoting the prices of 185 for the imported China yarn. So the weavers aren't very much inclined because when they are getting the yarn cheaper, naturally they will be adapting to go for the Chinese yarn only, neglecting the Indian yarn. So it is the last 1 week only this problem is surfacing.
Okay. And if you were to get VSF, that staple fiber, which is then input for yarn at a lower price than what you are getting today, then would that be fine?
Naturally, because we have a competitive edge in getting the fiber in a reduced price. And when we convert the fiber into yarn, naturally we can also match with the Chinese yarn price and we can operate it comfortably.
What is the current India price or Indian market price of viscose staple fiber, and what would be, let's say, the international price right now?
There will be a difference of close to some 30 to 40 rupees per kg.
And this is right now, or has it always been the case?
Always been there, but as long as the Chinese yarn anyway is not interfering to the Indian market, we are also very a comfortable market with the US. And because of the imports that is happening from the China and the yarn side on a reduced price, we are not able to find a matching price for our yarn made out of the Indian fiber. Made out of the Indian fiber we purchased from the Indian fiber manufacturer.
Right. So as you look ahead, one is, of course, you're saying that the government should do something to control the dumping of viscose staple yarn into India. But equally, are you also saying that could there be, let's say, opening up or of imports, or maybe some easing of these quality control orders for viscose staple fiber?
So main objective is to see that instead of controlling the yarn, because the world has become a global market, we cannot have any restriction. Instead of controlling the imports of cheaper yarn from China or all other countries which are able to supply such yarn at a cheaper price, The government of India should not restrict the import of fiber from countries like Indonesia, China, and all. Let that, if that fiber comes to India in an uncontrolled manner without any quality control, not nada, we ourselves can manage to supply the yarn matched with the China's yarn prices. See, the market has a value chain. We cannot look into the aspect of the spinners alone. When the yarn is available to the weavers at a considerable fair price, then they will be also encouraged to support our cause. So if the import alone is controlled, as far as the yarn is concerned, then their inputs will be little overloaded by way of increased yarn price. So what we finally seek is to remove the quality control order for some time, still the market stabilizes, and let all the Indian spinners of viscose fiber can import viscose fiber from available sources without any quality control restrictions, so that we can match with the prices by which the imported yarn is now attempted to be marketed in India. So that will benefit both the spinners and also the weavers who are dependent on our yarn for making their products to happen in the market. And further value addition with regard to MADAPS, home textiles, and every other value added process, the ultimate to the consumers also it will go little down.
What's the size of the VSF market or the viscose staple fiber market in India in terms of total demand?
It is ever increasing. People have now shifted from cotton to man-made fiber, man-made fabrics and all. So that trend is a world international trend. So the stake in cotton is slowly reducing because of the cost involvement and all, and the usability, durability and all. People are shifting from cotton to man-made fibers. Man-made fiber made sort of final products like bed linens, everything. Now they are preferring to go with the viscose fabrics.
China, I'm assuming, is the major producer of both staple fiber and staple yarn. But are there any other countries?
Comparatively with China, Indonesia is lesser, but Indonesia had got a strong potential in producing both fiber and yarn.
Right. Mr. Venkatachalam, thank you so much for joining me.
Thank you, sir.
Delhi is in the top 10 busiest airports in the world. New Delhi International Airport is now ranked 9 in the top 10 busiest airports in the world. It was 17, or rather ranked 17 15 years ago, so you can see how it's growing. The Airports Council International, or ACI World, has said that in 2024, the total global passengers were about 9.5 billion, which was up 9% from 23 and about 4% up from pre-pandemic levels of 2019. So there you are, traffic now clearing pre-pandemic levels, but whether this will continue is of course something that we have to see given all the tariff wars that are going on. The top 10 busiest airports represent about 9% of global traffic. That's about 855 million passengers, which also grew about 9% from 23. So the biggest airports are this: Hartsfield Jackson Atlanta International is the number 1, followed by Dubai International and Dallas Fort Worth International as number 3. The biggest jump in the top 10 was Shanghai Pudong, going from 21st position in 23 to the 10th spot in 24. The ACI World says the jump was fueled by expanded visa policies, the resumption and expansion of international flights, operational enhancements, and the recovery of the Asia-Pacific region, particularly China. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.